Hey everybody, hope everyone's doing well and had a good day. This is the Emini end of day review for Thursday, August 15th, 2024. I want to mention briefly, because it's Thursday, so tomorrow, weekly support and resistance, a little extra important. Tomorrow's Friday. What we have setting up on the weekly chart is a possible major trend reversal pattern. So here we have this tight bull channel, 3 pushes up, and then we had a strong trendline break, very deep pullback, almost to the bottom of this bull leg. And now we're getting a retest of the trend's extreme. We're not quite there. As you can see, here's the high of the bull trend way up here. But we do have this bad signal bar, and we still have an open gap. And so we have so much momentum up on this week that we may continue and test the low of this bad sell signal bar. And I suspect there are sellers here. You had bulls buying below, consecutive bull bars, tight bull channel, it's a weak sell signal bar for stop orders, and you had bears who did not take the sell because, again, it's a weak stop order signal bar for the bears, so the bears got trapped out of a winning short. So probably resistance at this area. And then coming into the day, on the daily chart, 2 big legs down, but look to the left, big up, big down. The market's in a trading range, tight trading range here, possible final flag, and then bull breakout and follow through, and the bulls are collecting many bull bars. We have 5 consecutive bull bars in a micro channel. We already tested this breakout gap, and you can see the market went straight through it and had follow through, briefly tested it on the follow through bar, but continuing up. So the next target for the bulls might be the start of the sell climax, could be up here. Could also be the second leg trap, so bear breakout, 1, pullback 2. Maybe you had bulls buying the close of this bull bar and they're trapped. This will be resistance as well. So we could be racing up to resistance. As you can see on the daily chart here, the market is in a broad trading range. And when that's the case, if the swings are broad on the higher time frames, but overall it's a trading range, that means the smaller time frames are trending. So you can see the market is in a bull leg, what's probably a bull leg in a trading range here, but on the 5-minute chart we've been having bull trend days. And then coming into the day, we had a big gap up, and as always I like to look at the Globex session, see what was going on. Was the gap up part of a big down, big up trading range, or was it more like this? So here's the information we have coming into the day. This bull bar is the close of yesterday's day session. So here's the start of the Globex session, and the market was in a fairly tight trading range through here. So this green box is the Globex session, trading range with a lot of small bars, lots of overlap, a couple legs down, couple legs up, back and forth. And then at 8:30 or 8:45 Eastern time this morning, we had this huge bull breakout bar and a follow-through bar closing well beyond the breakout bar. So big bull breakout and follow-through, closing far above the trading range, already well past a measured move of the trading range, which was here. So at this point, so much momentum, such a big breakout, the odds were we would go for a measured move up. So I thought it was important to keep an eye on this measured move target, and we'll put that on the day only session today. So the measured move target is 55.64.5. And we'll just quickly label that just in case I forget. Globex breakout measured move. So we know coming into the day we have a huge gap up, and then we have a bull bar on the open. So the market is accepting the gap up. The price from yesterday's close to today's open gapped up almost 1%. I think it was almost 0.9%. Let me double check that. 0.87%. It's a pretty sizable gap. Whenever there's a gap coming into the day, you expect at least a second leg in the direction of the gap. Gaps function exactly the same way as breakouts. They're functionally the same. So this might as well be a huge breakout bar. And we just looked at the Globex session, and it basically is. So it's a big breakout and follow through with bar 1 far above all the bars to the left. So we have trap traders below. The odds are any pullback will be minor and will lead to a second leg to the upside. Bull trading range bar on bar 1. So there might be profit taking above the bar. It might be a bull channel on a smaller time frame. The bar closed above its midpoint, but prominent tail above and below. So bulls, maybe they buy the close of bar 1, but scalp out at a new high. But bar 1's also a bad stop order signal bar for bears. So probably buyers below bar 1. Bar 2 rallied above 1 and then pulled back. Now 2 becomes a bad low 1 signal bar, obviously following the huge gap up. Being a doji bar, there's no major trend reversal pattern. It's likely a minor reversal, probably buyers below 2, but still probably sellers above 3, bulls taking profits. Bears might be selling for scalps, but that's the best they can hope for. And again, for the bulls, we're rallying, pulling back, rallying, pulling back. So again, there might be sellers above, and if there are, that would be 3 pushes up. 3 pulled back more deeply, so we're breaking out below bar 1. We've had a breakout above bar 1 and below bar 1. So we may be forming an expanding triangle opening range. We went down on 1, up above 1 on bar 2, then below 1 on bar 3. Maybe we reverse back up, go above bar 2, and then reverse back down. The odds were there were buyers below 1. It's a weak stop order signal bar, and most days are trading range opens and limit order markets. 3 is a bear bar, but it has a fairly big tail below, which shows that traders were buying into the close of the bar. The breakout bar did not close below the low of bar 1, so that damages the bear case. Probably buyers below. Might be a strong enough breakout for a second leg. And then bar 3 is a high 1 signal bar for the bulls, but that's a weak signal bar. It's a bear bar and in a tight trading range. 4 is an inside bar, bull reversal bar closing on its high. But again, the first 4 bars are in a tight trading range. Not ideal for stop orders. So even though bar 4 is a strong bull bar, and some bulls will look at it as a high 2 after the gap up, high 1 above 1, high 2 above 4. It's a reasonable stop order trade. However, traders will manage the trade and be quick to exit the trade, where if the market triggers the stop order buy above 4 on bar 5 and then hesitates, the bulls will exit and look to buy lower. 4 is an inside bar, so there's a reduced probability for breakouts to succeed. On a lower time frame, this is probably a triangle. 5, we broke out to the upside, but disappointing entry bar. It's a doji. So going sideways, but big down, big up. And again, here, on the smaller time frame chart, if you think about the market cycle, we gapped up, then there's a channel on bar 1, bar 2, trading range. Bear breakout on 3, pullback, maybe a second leg down on 4. Then 4 became a bull spike, pulling back on 5, so we might have a small bull spike and channel trend. Even if we do continue up in a minor bull channel, the odds are there are sellers above bar 2. 6, we are rallying to a new high, so again we might have an expanding triangle on the open. We went down, up, down, and up. And because we are going down and up, back and forth so much, reduces the probability for the breakout succeeding. So as far as buying above bar 2, betting on the breakout to succeed, it's not ideal. Also bar 4, we have a bull breakout, pause, then bull breakout on 6. So that might be 2 legs up, high in a trading range. The bulls really need follow through on bar 7. And then we went outside down on 7 instead. Strong enough bar, probably going at least a little bit lower and trapping bulls below 6. 6 was a weak stop order signal bar. We'll probably come back and test the low of 6 before long, but we may continue lower first. The bears are hoping we have a higher high, double top with bar 2, good signal bar 7, and then we fall for a measured move. Here's the neckline. Here's the measured move. The bulls look at it as an overall trading range on the open, but after the gap up, this trading range is a bull flag. So any sell-off is minor, and they're looking for the expanding triangle to be a bull flag, maybe 1, 2, 3 pushes down. Bar 8, a small follow-through bar. So the bears did get follow-through after bar 7, but the bar is about a third of the size of bar 7. So the momentum is much weaker on the following bar, the follow-through bar. 8's a weak stop order signal bar for the bulls, probably sellers above and a second leg down. But the risk the bears face is that this is a third leg, even though it's pulling back and going to a higher high. Computers will look at this as 1 push down, 2, and then 3. So as strong as this may look, it may be a third leg in an overall trading range. And think about the context. Big gap up, trend resumption, more likely. And here's that measured move target above. 9, we went outside up. I believe 9 went to a new low. So the low of 3 is 26.75. Actually, it's a perfect double bottom. So 9 was a perfect test of the low of bar 3. We have a wedge, 1, 2, 3, double bottom, truncated wedge. And now 9 is a good stop order signal bar for the bulls. Probably a reasonable buy above 9, and if bears are short, it's reasonable to exit shorts and look to sell higher. For the reasons I said, gap up, 1, 2, 3, wedge bull flag with a strong signal bar. The market could easily rally to at least a new high. And then a follow-through bar for the bulls on bar 10. So 9 and 10 are basically the opposite of 7 and 8. 7's an outside down bar and then follow-through, and then 9's an outside up bar with follow-through. And you can see, I don't know if I mentioned it with bar 8, but I said on bar 6 we'd probably come back and test the low of bar 6 before long. It was a bad stop order signal bar. The same is true for bar 8. After 9 rallied above it, it's a bad stop order on 8. The odds are we would come back and retest it. That's what happened on bar 10. The market retested the high of the bar and then bounced. There were buyers. There's an open gap, even though there's an overlap with the tail. This is what Al would call a body gap or a negative gap. At this point, on the close of bar 9, there's a gap between the close of the bar and the high of bar 8. And then here, even though 10 tested the high of bar 8, there's still an open gap between the bodies. So now there's a gap between the close of bar 10 and the high of bar 8. So if a bear sold here or sold anywhere, if a bear sold the close of bar 8 front running the breakout, they're getting trapped on bars 9 and 10. For the bulls, it's a reasonable stop order buy above 9 and then a decent entry bar on 10, even though it's not very big. Didn't go very far. It's a bad signal bar for the bears. There's room to the upside of this overall trading range. Now we have consecutive bull bars closing on their highs, and we were probably always in long coming into the day with the gap up and follow through. And even though it became more two-sided in here, until this trading range grows to 20 bars, the odds are it's a bull flag. So more likely we get the upside breakout and a measured move of the wedge double bottom that takes us close to the Globex breakout. Measured move. 11, more follow through for the bulls. Still not ideal. There's a lot of overlap between bars 11 and 10. These bars are fairly small, so bull, outside bull bar, good for the bulls, but then a couple of smaller bars. It's a spike in channel on a smaller time frame chart. But the bulls have 3 consecutive bars. That's the first time anybody has had 3 consecutive bars today. The bears never got 3 bars. The bulls never got 3 bars over here. So this is a sign of strength. We're getting a micro channel. The odds are the first pullback will fail. There's probably buyers below 11. It's a weak double top or head and shoulders top. So probably going at least a little bit higher. And then 12, breakout to the upside, pullback. We broke out to a new high and immediately pulled back. It looks like we broke out by just 1 tick. But 12 is still a bad stop order sell for the bears, even though it's a double top. You'd be selling below a bull bar and the 4th consecutive bull bar in a spike. It's a breakout, and the odds are this will get a second leg up. The bears will argue it's an expanding triangle, 3 pushes down, 3 pushes up, but they still need a setup. They need a reversal setup. Ideally, a second reversal now that the bulls have a 4-bar micro channel, and right now they don't have anything to sell. For the bulls, we're still in the buy above bar 9, so the bulls could buy above 9, stop below. No reason to exit so far. 13, an inside bull bar, so we're continuing higher. 12 might have been a breakout pullback, bulls by the close of 12, and then we continue to the upside. And again, for the bears, you think about the opposite of this rally, and there isn't much selling pressure. The bulls now have 5 consecutive bars with, up until this point, from here, trending highs, trending lows, trending closes, trending opens, trending everything. Again, it's a spike, and the odds are we'll get a second leg, and the first pullback will have buyers below. Inside bar 13, probably continuing higher. We might be in the early stages of a bull trend. We had a big gap up, maybe a wedge bull flag. We're getting strong follow through for the bulls at this point. The bulls are controlling price and time. I mentioned in one of my last videos that it's actually a problem when one side only controls price. For example, bar 13 here, it's a good looking bear bar. However, and this has to do with context as well, but even though it's a big bar, it's only one bar, and the price did move a fair distance. But when you're in a trading range, the price gets vacuumed up and down all the time, back and forth. So the bears really need to do more than just one bar, and they get bad follow through. So it's really important for either side, if they want control, to control price and time. This is a great example of a strong bull breakout controlling price and time, pretty similar to today. $14 continuing higher, and it's a doji. Do you want to sell below 14? Of course not. We're still in a micro channel with only bull bodies. Really, there's a lack of selling pressure. The bears can still argue that it's a wedge top, 3 pushes up, but the odds are this leg is too strong, and the strong traders are buying below any reversal attempt. So if we do fall below 14, strong bulls are buying below, betting the reversals will fail. 15, another inside bar. And we're getting, on a smaller time frame, there may be 2 or 3 legs up here. We rallied on 12, pulled back, rallied on 14, pulled back. We may get another buy climax and then pull back. But any pullback is probably minor. This is a really decent bull breakout, and it's probably going to get a second leg and a measured move up. Here's the current measured move from the open of 9 to the close of 15, and that brings us to just about the Globex breakout as well. 16 rallied and pulled back, so 1, 2, 3 pushes up. So we're getting profit taking by the bulls, but 16, just like 14, do you really want to sell below 16? Is the 16 doji going to reverse this bull spike? Probably not. The bears, or I should say the weak bears, see only the reversal bar, and they see that they can sell below the bar, put a stop above the bar, have very small risk, and they can go for many times their risk and have maybe a reward of four or five times their risk. The problem is probability. The odds are there's buyers below. We'll go above bar 16, and this is going to get a second leg to the upside. We finally pulled back on 17, but immediately we found buyers below. 17 is a high 1, and in this context, it's following a strong bull breakout. Better to buy above 17 than sell, even though a lot of times high 1s pull back and lead to deeper pullbacks, high 2s and high 3s. In this context, you really don't want to be trading counter trend. 18, this becomes the high 1. On a lower time frame, it's a high 2. There's an implied 2 legs. We sold off on 17, rallied, sold off on 18, and rallied. That's 2 legs down against a very strong trend. And the bar, even though it's a doji, it's closing above its midpoint. It's a buy reversal bar. Reasonable stop order, but the stop goes below bar 9 or at a distance below 18, but not directly below 18. That would be a skunk stop. 19, a good breakout bar for the bulls, closing on its high, closing far above these bars, trapping traders. Might be the start of the second leg. 1, pullback. 2. And a bull bar closing on its high in this context. It's always in long. It's good for the bulls. Reasonable to buy above the bar, probably going higher. There may be some resistance above 16. We sold off from 16 down to 18. So bulls who bought up here may be disappointed, taking profits, but this is not enough bars or selling pressure to be a major reversal. So we went sideways on 20, some profit taking. We went sideways, which is to be expected at this resistance level, but again, the expectation is minor reversal, not major reversal. Probably buyers below 20. 21, continuing higher. we have a bull bar, then a doji, then a smaller bull bar, maybe get another doji, and then maybe a third push. Another way to look at this is leg 1 equals leg 2. There's another measured move, target above, and ask yourself, when's the last time a bear made money since bar 9? The answer is they haven't. Even limit order bears are not making money. So there's absolutely no reason to be short. If anything, you are long or you're flat. This is also a great example of urgency. You see a pretty decent stop order buy from the bulls, pretty good entry bar, and then the bulls just keep adding more and more bars, and traders are desperately waiting for a pullback, hoping they can buy below the low of the prior bar, and a pullback just doesn't come. And there's this sign of urgency. Whenever you feel like you want to enter during a strong trend on a pullback and a pullback isn't coming, it's a sign that you should probably just enter with a small position, use the correct wide stop below bar 9, and at least start building a small position, get in the market. 22 going a little higher but pulling back, but this channel is way too tight to be looking to sell. Tight bull channel, even though it's a bar closing below its midpoint, there's probably buyers below 22. Inside bar 23, closing on its high. It's a variation of a high 1. Bull flag probably going to go higher. Unlikely this leads to a major reversal. 24, the first bear trend bar in many bars. Bulls will see 24 as a discount. They see the bear trend bar in this tight bull channel. They'll simply buy the market as soon as bar 24 closes. They'll scale in lower. If it continues lower, with a stop below 18, they know the odds are they can buy, scale in, and they'll probably make money. 24 is probably a minor reversal. Unlikely this leads to a strong bear trend. Bad follow through for the bears on 25. But 24 might have been enough for a small second leg down. But if there is a second leg down, bulls will buy it. There's probably buyers below 25. 26, we triggered the high 1 above 25, but went sideways. Now we have maybe 5 bars going sideways, which the bulls see as simply a bull flag. Triangle, bull flag. The bears will argue it's a final flag, it's a tight trading range, but you have to judge the selling pressure, and we really just have one bear bar in, 20 bars. It's really not ideal to look for a sell setup. Still always in long. Every reversal attempt will likely fail when the market's trending. 80% of reversals fail. 27 breaking out to the upside. 3 consecutive bull bars. Buyers below 27. Buyers on the close of 27 were probably going higher. It's okay to buy at the high of the day when the market is in a bull trend. 27 broke out. It's running the weak stops above bar 24, so there might be fuel from weak bears getting out of shorts at this price. Follow through bar for the bulls on 28, even though it's an inside bar. It's a small bull bar closing on its high. It's a high 1. 4 bar micro channel, still a tight bull channel. Is it a wedge? 1, 2, 3. If you're counting wedge tops in a bull trend, you are really making a mistake. There's no reason to be looking for wedge tops when the market is trending this strongly. This is a small pullback trend, and if you're looking for a wedge top, you are doing the wrong thing. Trends are always creating wedge tops. In this case, bull trends are always creating wedge tops that fail and lead to continuation patterns. So even though you can count 1, 2, 3 pushes up, Maybe there's profit taking here and we pull back again like 24, but it's very unlikely this leads to a major reversal. So some bulls might take profits in this area, look to buy lower, but the bulls are not panicking out because of 3 pushes up, because on a higher time frame, this is still a breakout. We went sideways on 29, broke out to a new high, but then pulled back. It's a decent bar on 27, but then 28 and 29 were smaller, and they're dojis. The momentum is slowing down for the bulls. Might be a resistance area. There might be some profit taking here before we continue to the upside. And then 30, just like 24, it's a very similar bar, and you know what happened on 24. It had bad follow through, so bulls will see 30 as a discount. It's a bear trend bar and a strong bull trend. They'll buy the close, buy more lower. 25 might be a tight stop. It's okay to use it because we did break out to a new high on 27, but other traders will use the wider stop below 18. The reality is if we fall below 25, there's probably buyers waiting below. But 31 in this case, we reversed straight back up. 2-bar reversal on a higher time frame. If you look at a 10-minute chart, this would simply be a reversal bar with the tail below, closing on its high. I said back here, it's okay to buy at the high of a bull trend day, so it's reasonable to buy this high too. It's a double bottom with 28 and 31. Strong signal bar and reasonable to buy above. Go for a measured move. You can look for this measured move, double bottom. Here's the neckline. Here's the measured move. Very close to the Globex breakout measured move as well. Did not trigger the buy above 31. 32 went sideways. 31 is an outside bar, and 32 is an inside bar, so this makes this an IOI pattern, which in this context, in a bull trend, is a continuation pattern. Traders can buy below and buy above 32 and expect this trading range to result in trend resumption. 33 went outside bar 32, but it's a trading range bar. Probably buyers below, maybe sellers above, but sellers are scalping and they're risking that this is a bull trend and we get the bull breakout. 34, bull breakout to a new high, closing above all the bars to the left, probably going at least a little bit higher. This might be a vacuum test up to the Globex breakout measured move. 35, a good follow-through bar for the bulls, but now we're at this measured move target. It's a reasonable place to take profits. However, not as reasonable to sell here just because we're at a measured move target. You can also argue for the bears that this could be an exhaustion buy climax. So there's a gap between the close of 34 and the high of all the bars to the left. So we'll just say the high of 33. Then there's a gap between the close of 35, the high of 33. If this is an exhaustion gap, we know it's either an exhaustion gap or a measuring gap. If it's a measuring gap, there's a few ways to draw that target. The first one would probably be from here to here, which we almost already got. The next one would be here to the start of the gap. Then there's one here, and the biggest one is all the way down here. So it's probably unlikely we're going all the way up here, but we might go somewhere in the middle, maybe here, but we are at a measured move target, and it's reasonable to expect a deeper pullback. Plus, you can argue bull breakout of a bull channel, low probability event. More likely we reverse back down and get a test of the bull trend line, which might be here. So again, reasonable for the bulls to take profits, but less reasonable for the bears to sell just because of that reason. Sideways on 36, high 1 after what could be a late bull breakout at a measured move target. Not ideal for buying. aggressive bears will sell above the high 1 for a scalp and a test of the trend line. 37 did not trade above 36. Instead, we ended up falling. It's a trading range bar, and the bears are looking for the gap to close. We haven't quite got there yet. And for 36, it's one push down, a rally, second push down, rally. Maybe we get a third push down and find support at the high of 33. 38, a bear trend bar. We're getting acceleration, the strongest bear bar of the 3 bear closes, which might be exhaustive on a smaller time frame. It's a bear breakout attempt of a bear channel. It's acceleration late in a channel. We're testing the major bull trend line. We're also testing the high of 33, which we're expecting to be support. So we might bounce here, but this might be enough for a second leg sideways to down. 39, we continued lower. We broke this bull trend line, so there is a trend line break. So good for the bears, but it's only 4 bars down. It would be better if the bears can get a bar completely below the moving average. 39 is the first test of the moving average all day. The odds are it will get bought, but the bulls probably need a second reversal because it's not ideal to buy after 4 consecutive bear bars. This will probably get a second leg down. 40 continuing lower, but big tail on the bottom, buyers into the close of the bar. We tested the bar 25 low, 50, 75, 50, 75. So if the bulls have a stop below 25, arguing this is the most recent major higher low, they ended up defending their stops below 25. The market did not run the stops. As soon as the market runs those stops, the bears can argue the market is either in a trading range or an opposite trend, a bear trend. But for now, the bulls have defended their stops. Inside bar 41, probably buyers below and sellers above for a second leg down. It's a micro channel. 42, bull bar closing on its high. Becoming a problem for the bears because on the way down, you can see there's tails here, a couple of legs, buyers into the close of 39. We rallied up to the high of 40, sold off on 40, rallied into the close. It's probably a parabolic wedge on a smaller time frame. But 2 bars, the bulls are hoping this becomes an endless pullback, traps the bears, and we continue up. The bears are hoping this is a minor reversal, and we get leg 1, pullback, leg 2. But this is counter trend. As strong as it may look, you look to the left, and it's really just a minor reversal. It might be enough to start a major trend reversal. It did break the bull trend line. But if you're a bear looking for a major trend reversal, you really want to see more consecutive big bear trend bars, more selling pressure, more bars in this pattern. And you want to see the test of the prior trend's extreme. You want it to be weak. 43, we got a bear bar. We fell below 42, which was a low 1. Signal bar, bad context. This sell-off by the bears is counter trend, strong enough for a second leg, but 43 may be that second leg. And you can see traders bought below 42. Micro double bottom with, you could say, 40 or 41 and 43. 43 closed above its midpoint. It's a buy reversal bar, and bulls see it as a bull flag. It's also a big double bottom with 25 and 40. Inside bear bar on 44, but possibly nested 2 legs down, 1 pullback 2, and 1 pullback 2. So this might be more of a buy the close bar, and the bulls might take it as an opportunity to buy when the market is cheap in a bull trend. And then 45 reversed up, outside up. It's a high 2 for the bulls, high 1 above 41, high 2 above 45. Again, it's nested 1, 2, and 1, 2. reasonable stop order above 45. We're still always in long. So if a bull exited for any reason, they probably have to buy again above 45. I said it was reasonable for back here. The bulls want to buy the first moving average test, but they don't want to buy 4-5 consecutive bear bars, so they won't take the high 1, but the high 2 is more reasonable. 46 triggered the high 2. Now for the bears, it's a low 2 signal bar, sell off, low 1 below 42, low 2 below 46, but it's a doji. Overall, it's counter trend, and the bulls will take that as an opportunity instead to look to buy, so probably buyers below. 47, almost an outside bar. It's a trading range bar. We broke out to the upside, but found sellers. The bears see 3 pushes, 1, 2, 3, hoping for a test down to a new low. Maybe a wedge bear flag, leg 1, pull back, leg 2, but it's still a counter trend. There hasn't been much of a retest of the prior trend's extreme. It's not impossible that we reverse here. It's just very unlikely, at least without a retest. You want to see a major trend reversal, so bull trend, trend line break, retest, and then you can look for a lower high major trend reversal. 48, we're breaking out to the upside, and there might be resistance to the left at this point. Basically, the Globex measured move was the top of the trend at this point, and you can see lots of profit taking at that area. So if we retest that price, it's probably resistance. However, the bulls will be hoping, or what the bulls are looking for is a measured move of this bull flag, this overall trading range, and a measured move up to here. 48 and 49, a pair of bull bars, 49 closing on its high. It's good for the bulls. Selling pressure, not great for the bears, so this retest is becoming fairly strong. The bears are going to need at least a second reversal if they're going to sell. Another bull bar on 50, probably going at least a little bit higher. It's a micro channel since 45. We're still in the high 2 buy above 45, and the bulls are getting decent follow through. 51, we pulled back, but it's only a doji after maybe a 6 or 7 bar micro channel, unlikely to reverse. The bears would be hoping we have a bull trend, trend line break, lower high, major trend reversal, but 51 is a weak signal bar, and the rally is too strong. They need a second reversal. We tested the low of 36, and we're finding resistance there, so it's expected to go sideways, but now we have to judge the strength of the bears and the reversal, and whether this will lead to a major reversal or trend resumption. The market can also continue to go sideways. 52, bull breakout. Still within this trading range, so this might be a leg in a trading range, 2 legs up, a couple legs down, a couple legs up. There might be resistance at the high of the day, but it was a small pullback trend. And like I said, the bulls are looking for this measured move target. Doji on 53. It's a weak breakout attempt. We're testing the Globex measured move once again, testing the close of 35, where bulls who bought the close here got trapped, so probably resistance in this area, but tight enough bull channel here. The first reversal down, likely to fail. We went outside up 54, bull bar closing on its high, probably going at least a little bit higher. 55 breaking out to the upside, breaking out above all the bars to the left. The bulls still want follow through, but judge the selling pressure through here. I would argue the bears don't have any bars since bar 44, so all the way from 45 to 55 for 10 bars. The bulls have controlled the market. The bears haven't even had 1 bar. There's been dojis, but that's it. Tight enough breakout or channel for the bulls that it's a breakout on a higher time frame. Sideways on 56, but it's an inside bar, unlikely to, or more likely, it's a minor reversal, probably buyers below. 57, we're pulling back into this range. But we're testing the bull trend line, maybe breaking this bull trend line. The odds are there's buyers for a retest. And then we reversed right back up on 58. 58's a high one. The problem with calling this a trading range, all of the bars are above the moving average. There's only been a couple of bars closing below the moving average today. This is still overall a bull trend. Maybe this is the channel. There's obviously different ways to look at it. But trading ranges have bars, maybe 5 bars above the moving average, 5 bars below. The moving average is flat like in here, but over here, the moving average is sloped up, and most of the bars are above the moving average. 59, an inside bar. Going sideways, it might be a final flag. It's a tight trading range. Bears looking for a double top with 35 and 56. But where is the decent sell setup? The signal bar, the strong trendline break. The bears don't have it. 60, we got a small bull bar. Weak stop order sell, so good limit order buy. Probably buyers below. More sideways on 61. Very tight trading range, but still part of a tight bull channel. Nothing to sell. Continuing in this tight channel, lots of overlapping bars. Limit order market at this point, better to be long or flat. Reasonable to be flat. 63 getting a bull breakout to a new high. The bulls are still in control, holding the price above the moving average, above the rising moving average. Probably continuing higher. Minimum follow through bar 64. It's a doji. Probably buyers below. 65 pulled back. There's actually a gap, a tick gap. 65 opened a tick below the close of 64. So there's urgency for sellers into the close of 64. And then we gapped down. 65 sold off and tested the moving average. It's a high one late in a bull trend. There might be sellers above for a scalp. Maybe we're entering a tight trading range in here. It's becoming less clear. There's a lot of overlapping bars. There's a wedge. We went up on 58, pause, up on 60, pause, up on 63. But it's a minor reversal down, maybe a double bottom. 66 triggered the high one. Sellers above, we went more sideways. Very tight range through here. For always in bulls, it's reasonable for the bulls to be flat at this point. Over here, the momentum is strong. Even here, the momentum is good. But now we're getting a lot of overlapping bars, a lot of trading range bars. If you had to choose, the market is still probably always in long. But the later we get in the day, the greater the risk is that you're going to be holding long into a profit-taking sell-off. So typically on trend days, on a bull trend day, you'll get profit-taking into near the close of the day. The bulls who have been long taking profits, we get a sell-off near the end of the day. We're going very sideways here. The momentum is really drying up. So I think at this point it's reasonable to be flat. It's a tight trading range, limit order market. Our second leg down on 67, so we sold off, pulled back. Second leg, double bottom with 58. Probably rally for a couple of legs. 68, rallying, but to the top of this range. The upside might be limited. 69, bear bar, probably sellers above. And it's a tight trading range, so limit order market, no stop order trades. 70, more overlap, 2 legs down, 2 legs sideways to up, probably sellers above. A little bit higher on 71, but failing to break out to a new high. Maybe a wedge. One, two, three. Lots of overlap. Maybe we'll come back down and test the 58 low again. And the later we get in the day, we only have about 10 bars left in the day, you really have to wonder if there's going to be a profit-taking sell-off. And for those, it doesn't mean I'm looking for a profit-taking sell-off to get short and catch the sell-off. It's more about making sure you get out of your longs before that happens. 72, high 1, but top of a trading range, 3 pushes up, very tight range with overlapping dojis, not ideal, probably sellers above. 73, a little bit higher, breakout to a new high, but it's a nested wedge. 1, 2, 3, here, 1, 2, 3. Reasonable place for bulls to take profits late in the day. And then bad follow through, 74. So we rallied, pulled back, rallied, pulled back, rallied. We're pausing. Bad follow through, sellers above, maybe sellers on the close. 75, bear bar, closing on its low. Might go a little bit lower, and if this overall range is a trading range, we know it's a channel at this point with higher highs, higher lows. But channels convert into trading ranges, and it may have started all the way back here on 58, so we could test this red line. And then 76, good follow through for the bears for this stop order sell. Bear breakout and follow through, crossing the moving average. It is leg 1, but it's minor, so you can say it's a strong minor leg 1, strong enough for a second leg. Follow through, more follow through on the next bar. And we already went for a measured move of the bodies of 75 and 76 on 77, so that might reduce the downside. There's probably support to the left. The 45 high 2 stop order, that's exactly where we're testing. So 3 bar sell off, but it might be similar to this, where overall it's really counter trend, and we could reverse up pretty quickly after maybe a brief second leg down. In this case, we didn't get a second leg down. 78 reversed up very quickly. But 78's a big bar, but big down, big up, high in the range. Upside's probably limited. Sellers above. 79. Reversal bar closing on its low. Big up, big down. Not great for stop orders. Probably buyers at the midpoint of 78. And then inside bull bar. 80. It's a high 1, but high in the range after a good reversal bar and just late in the day, not really ideal. And then another leg down for the bears, leg 1, leg 2, but probably buyers in this area, maybe the 50% pullback of 78. The bears were hoping this would get a second leg. 78 rallied and was a surprise and a disappointment bar. So the bears probably happy to take break even on the entire trade if they can get it. So if the bear sold the close of 77, sold more below bar 79, that's about their midpoint, the low of 81. Always in today, coming into the day. On the gap up and the bar 1 follow through, probably always in long. Always in long through here, no reason to really be short. However, maybe you exit longs if you are holding long below 7, but then you buy again above 9, and then always in long through here. This probably not enough for always in short. The bears never really got strong consecutive big bars, and 40 did not close below this major higher low or this one. Always in long, but at some point it gets very two-sided and not as directional with the momentum. Maybe you get 3 pushes up. We're getting lots of overlap, and it's not that it's necessarily always in short, but it's not as clearly always in long either, so it might be better to be flat. This was not enough for always in short. This is just trading range behavior. Sell vacuum, buy vacuum. Stop order trades today. I thought you could buy above 4, buy above 9, 10, 11, 13, 15, any of these bars, always in long, 19, tight bull channel, 21, even 23. The only problem I have with 23 is it might be 1, 2, 3, a couple different ways to see it, as 3 pushes up, and it's not that you're expecting a major reversal, but it's an area where we might pull back a little deeper, and then we tested the bad signal bar 20. High 1 above 25, the context supports it. Same with 18, I think I missed that one. 31 was reasonable, didn't trigger. You could buy above 32, even 33. I wouldn't take the high 1 too strong. You need a second reversal, second entry long. 45 was a really decent high 2. Pull back to the moving average in a bull trend. Always in long. You can buy above 49, 50, 52. 54 is a high 1. In a dangerous area. This might be an area we start going more sideways. And the bars got very small and the range got very tight. So through here, not really anything for stop orders. If you're brave, maybe you sell below 75. It's a low 3 with a decent signal bar. Context supports a pullback. You might get an end of day sell off. Limit orders today. I thought you could buy below 2, buy below 1, sell above 3, buy below 4 or 3, buy the first pullback below 16, buy below 23, buy below 29, buy below 32. And then the same issue here, 3 pushes up. So 1, 2, 3. You're expecting a minor reversal, but we could come all the way back down and test here. So better to not buy up here. There is a limit order sell above bar 40, which got triggered on 42 for a scalp, a brief second leg. And then 42 is a bad low 1. You could buy below it. Buy below the first pullback here. That would be below 50. 53 is a bad low 2, tight bull channel. Weak signal bar for the bears. You can buy below. You could even buy below 56. But that one's less ideal. 3 pushes up. It's a bear bar. You're at the high of the day. And then all through here, buyers below, sellers above, limit order market. I thought you could sell maybe at a distance above 77. Not ideal to sell directly above it, but maybe above 76 or 75, which we didn't quite get above 75. Maybe we did. It's actually a perfect test of the high of 75 on 79. The reason I wouldn't sell directly above 77 is because it's the middle of the range. It's a trading range. I'd rather buy low, sell high. And then there's also a limit order buy at the high 2 signal bar, but I'm not sure if that one would have been triggered. It was a perfect to the tick, I believe, test. The high is 57 even, the low is 57.25, so it actually went 1 tick above the high of 45. So if you had a limit order even 1 tick above the high of 45, you may not have been filled. The day type was a small pullback bull trend day. Please feel free to leave questions in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night. Thanks for watching.